Well, let's move to the second final paper of this session. So we will have a Libra or Librae basket-based stablecoins to mitigate foreign exchange volatility spillovers. We'll have Thomas Leach from University of Pavia. Thomas, can I ask you to present your paper in 10 minutes or less if possible?
Hi, can you hear me okay?
Yes?
Yes, okay. I will be as fast as possible and concise to respect the time limit. Okay, so first, thanks to the organizers for inviting us to present at this conference. I'm going to speak very quickly about our paper. I seem to have the same problem as the previous, that I can't. No. Okay. So first, some background on stablecoins, which is the theme of the paper. We look at specifically Libra, which was proposed by the Facebook company, which I'm sure most of you are now fully aware of. Just to give some background on stablecoins as a whole, they were kind of, let's say, born out of the cryptocurrency domain as a way of addressing the let's say the volatility problem in most crypto assets that were available during the early days of the crypto revolution, so to say. To give a kind of taxonomy amongst these new kind of stable assets, we borrow some terminology from some authors from the ECB that divide them into 4 subcategories. Firstly, tokenized funds, which can be almost like akin to a kind of e-money type solution whereby the stablecoin represents a claim on the issuer and it's backed by some kind of commercial bank money, possibly central bank money in the form of reserve deposits. Some examples of this include Tether and utility settlement coin. There is also the off-ledger collateralized stablecoins, which represent a claim on the issuer, which use an underlying pool of assets, which can be varying types of assets. For example, multiple different currencies, like was proposed by Facebook, T-bills, other types of short-term or other types of assets. Then we look at, there is also on-ledger collateralized, which is more of a novel kind of approach, which uses cryptocurrencies as the underlying asset. For example, the DAI coin, which uses Ether as the underlying asset. And lastly, algorithmic stablecoins, which take into account the expectations of the user about the future price of the stablecoin. But these so far tend to be more conceptual than actually used in practice. So a little bit about Libra. The association kind of originally came out with this plan to have a kind of weighted global stablecoin that seems to have changed now after some feedback from I think the global regulatory community, kind of suggesting, and it now seems to be that Facebook intends to kind of issue individual stable coins, one per currency, and there will be like this idea of a Libra coin which floats on top of that, which is still weighted by the underlying currencies, but is backed by the currencies that are issued underneath that. Why has it become such an important issue? Well, Facebook kind of has the ability to push this new asset to its vast 2.4 billion users that use the platform. So kind of whilst for the time being, most kind of crypto assets, stablecoins have been, say, limited in their impact on the real economy, Libra seems to have kind of pushed that up the agenda in terms of the fact that if there was widespread adoption, that could have some systemic impact. So what do we do in this paper? The idea is to first derive a basket-based stablecoin, which was the original idea when we started discussing this project from Libra. What's the optimal way to construct that basket, and then what are the properties of that basket with respect to shocks in the underlying currencies that could affect the stability of that coin. So not to spend too much time on the methodology, but one important measure that we use is this idea of a reduced normalized value. So when you look at, this kind of alludes to some of the comments from the previous discussion, but when you take each currency, you have to use a numeraire. Typically, you would use the dollar, but these authors, Hovanov and Al, showed that you can give each currency or show each currency as a function of the geometric mean of other currencies that you consider in a basket. So instead, we have a value for each currency. And so in this study, each currency kind of is represented as a function of how much it varies against other currencies in the basket that we choose. Then we use, it's a simple minimization problem to find the optimal weights in that to kind of construct a stable coin which has the lowest variance across all the currencies in the basket. And then to analyze some of the stability properties, we use some forecast error impulse response functions. And we also look at in the underlying basket, we use some spillover volatility analysis to look or to identify what are the key currencies in the basket. So first, to construct the basket, we, as stated above, we use this minimization technique on these reduced normalized values of the currencies in our basket. In the basket, we use the dollar, the renminbi, the euro, the pound, and the yen. And as a result, we construct this this currency, which is also the name used by the previous authors, but a stabilized aggregate currency, which perhaps unsurprisingly by construction is the least varying of the currencies here. Perhaps interestingly is the weights that are adopted, because we compare them with the IMF weights that are used in the special drawing rights, and you can see that they're actually perhaps less weighting on the dollar, more in the renminbi, but in overall there's kind of a relatively even weighting across or approximately 1/5 in each currency, as opposed to those used by the IMF in the special drawing rights.
Thomas,
Okay.
3 minutes, okay?
Sorry?
In 3 minutes.
Okay,
Right.
okay.
Thanks.
I'm monitoring. Okay. So to put this into perspective, what we do is we take this basket, this stable currency. We take some additional currencies, those that are from emerging markets. We take the currencies with the 5 largest remittance markets. So it's the Indian rupee, Mexican peso, Nigerian naira, and the Philippine peso. And basically what we do is we create a new basket with these additional currencies in, and we recover what would have been the historical price of our stable currency. And then we compare how much these vary against each other. So just to look at across all time, what we observe is that the stable currency, with respect to all of these currencies in the basket, has the lowest standard deviation across all of the currencies in the basket. The special drawing rights is also relatively low, and also the pound as well. But overall, the stable currency seems to act as, say, the most stable across this whole basket that we construct. So to jump to some quick impulse response functions, perhaps we just focus on a few of them here. So, when we were thinking about this, we thought about what perhaps, who would use Facebook Libra. Obviously, if you believe the motivation that the company states, which is to include financial inclusion for developing economies, you could think of this as perhaps a tool to be used by people that are, want to that use remittances. So foreign workers that work in the US that remit back to their home countries. So we consider if there was a shock on the dollar, negative 1 standard deviation shock on the dollar, what's the impact on firstly the other currencies, but here importantly, what's the impact on our stablecoin, which relative to other currencies actually has a price increase. So if you were holding the dollar and you wanted to make remittances, for example, you would somehow insure yourself against this shock by holding this stable coin. Lastly, just to very quickly give some idea behind underneath the dynamics underneath the basket, which is that using these volatility spillovers, we observed that the US dollar is the most prominent currency in the basket, which if we look predominantly at the spillovers from that currency to others, it's the one which, let's say, gives the most in volatility to the other currencies. So we take this as the US dollar being the one which is the predominant one in driving the value of the basket of currencies. So just to wrap up, to be brief, a stable coin or this idea of a basket-based currency is not a particularly new phenomenon. There was the ECU, there was also an Asian currency unit proposed, and STRs. We give a kind of first look at what are some of the stable properties of a basket-based currency with a kind of novel measure which kind of allows us to eradicate looking at this measure with the numeraire in one particular currency. Perhaps what we would like to do, to perhaps anticipate some comments, but we would like to perhaps study really what is the impact of this on some for remittances. So what kind of utility could a coin like this bring to remittance users? Alternatively, I think, as was mentioned by Marcus earlier in the presentation, is there kind of, could this lead to some Libraization or dollarization in emerging market economies? And with that, I'll wrap up there, and I hope I didn't use too much time. And thanks.
Many thanks, Thomas. So now moving to the discussants, we'll have Riam Ayadi from City University of London and also Elisabeth Noble from EBA. So first, Riam, could you please try to discuss in 5 minutes, if possible?
Okay, thank you very much. Do you hear me well?
Yes, very well.
Okay, perfect. Thank you very much for allowing me to discuss this paper. So I will go straight to the points I want to make.
Thanks.
And I will share my slides also with the authors if they would like to see them. Now, first of all, I want to provide some motivation to this paper. I think it's important for the authors to look at the challenge for facing stablecoins. So first of all, one of the main issues I see is many of those first generation stablecoins were launched and circulated to take into account the gaps in regulation supervision. I think this is one of the key challenge there, which has to be recognized somewhere in the paper. Second is there are different stability mechanisms. But of course, the paper mentioned them, but then it does not mention what are the risks of those stabilization or stability mechanisms for these stable coins, especially if not properly managed and regulated. And I invite the authors to look at the latest report by the FSB, October 2020, which provides a very nice overview on those risks in terms of, for example, in terms of financial stability, consumer investor protection, data privacy and protection, financial integrity compliance, AML-CFT, and also cybersecurity and other risks that need to be looked at. Also, I think it's important to realize that the stability provided by those currency baskets could eventually shift liquidity away from international dominant USD and others. It might also disrupt the exchange market dynamic, but all of this needs to be tested empirically, and I think the paper will benefit a lot if they can add some papers into this discussion. Also, if the stablecoins achieve high liquidity in cross-border payment, assuming, okay, there might be some negative externalities because of the operational difficulties, for example, in the companies that provide them, especially if eventually these are provided by private players. So it's important also to look at this and have a discussion at these aspects in the paper. Cryptocurrencies and stablecoins trading liquidity also might be polluted by wash trades. I think, a point on that could be also interesting to add in the paper, at least a discussion. I'm not going to go to the objective of the paper, I'm going to skip these slides. So I'll go straight to some suggestion for improvement and extension if interested. So on the data, the paper from time to time mentions COVID. I don't know for which reason, because the period of analysis is up to 19, if my understanding is correct, of the latest draft of the paper. So I would suggest that could be extended to 2020, because we're talking about daily data, so they can provide this information to include eventually the COVID-19 period. And also to better justify the choice of the currencies in the basket, because I didn't understand why those currencies specifically, and which are in fact specific criteria for the choice of those currencies within this basket. On the overall structure of the paper, I think could reorganize a little bit and streamline and emphasize also the discussion on the risks of the different stabilization mechanism, as I mentioned before. On the results and policy recommendations, I think it's important probably to extend this policy discussion on the impact of the stable coins on the determinant of a dominant currency in terms of additional, for example, loss absorption capacity or minimum capital requirement, liquidity coverage ratio, and SFR. I would invite the authors to look at the paper by Ogawa and Muto for 2019 and 17, which provide a nice discussion in that sense that could be factored in. And I would like to see more on the impact of the existing regulatory and supervisory frameworks. And should there be, for example, a new regulatory and supervisory requirement for issuing and exchanging stable coins? And again, I invite the authors to look at the FSB paper 2020. Thank you very much. I think I was quick and to the point. Thank you.
Yes, very, very good and very, very straight to the point. Many thanks. Now, Elisabeth, we want also to discuss, provide some views from European Banking Authority. Elisabeth, you are muted, Elisabeth.
Can you hear me?
Yeah, now it's fine. Good.
Okay, perfect. Thank you very much. Well, I'll keep this to a minimum in view of the time remaining for this session. But I think it's a very nice paper, not only for the purposes of illustrating the composition of the initial basket, but also thinking about what happens when we come to subsequent changes of the basket and what this potentially means for holders, which takes us to a really critical question around governance. So who controls decisions around basket composition? And is there a question for us as regulators to say, well, do we need to think about specific requirements on transparency around those decisions, disclosures to consumers, and fundamentally, is there a question for us around what sort of role, if any, we would like for central banks and financial services supervisory authorities in terms of having a control over that decision, whether it's a pre-approval or some sort of right of non-objection. And of course, this is an area where we have a very extensive ongoing dialogue around what are acceptable conditions for stablecoin ecosystems to become operational globally and of course within the European context. So as Rim says, I think the FSB paper is certainly worth having a look at. We also have, of course, in the European space, the current legislative proposal on markets in crypto assets. And again, coming back to this question about governance, transparency, and not only from a monetary policy perspective, but fundamentally from a consumer protection perspective to make sure that token users have appropriate disclosures around risks and opportunities around the use of these tokens. So I think, Samuel, I'll leave it there, but I was very heartened to hear that Thomas will consider future iterations and evolutions of this paper, because I think it does have a very useful role to play in informing these policy choices around governance of the stablecoin ecosystem. So thank you very much.
Thanks, Elisabeth. Thomas, before starting, we have a question as well from Jen Cashden from CBI, asking, should the free floating be a requirement for inclusion in the basket? It might not be the case with the CNI. Why? Okay, so Thomas, could you please give us 2 minutes before the break?
Sure. Firstly, just to say thanks to both the discussants for the feedback. I think we've got a lot of things to take on board and some plenty of directions in which we can take the research. I guess this kind of addresses a little bit also the question about the composition of the basket, which is which currency should be included, which I think right now we don't have a good kind of, let's say, theory as to which one should be included. For now, we took basically the same currencies which are used in the IMF's SDR basket. So we based our one on that being the 5 major currencies across the globe. But there is some discussion around whether there is perhaps some reason to kind of widen the basket. What is the kind of what are the prerequisites for being included in the basket? And that's a kind of a discussion I think in this paper we've kind of avoided, because it can perhaps be more of a political one, and we focused more on the statistical aspects of it here in this paper. But that's definitely something that is out there to be discussed. So I'll leave it at that.
Many thanks, Thomas. Okay, so many thanks to all the authors and the discussants on this session. So we are a bit late, so we will delay. So we'll start now the break, and we will start again session 4 at 4:10. Many thanks to you, to all of you, and then let's start at 4:10. Thanks. Bye bye.